Hello and welcome back to the channel, everybody. I just wanted to hurry and do a little update talking about what's going on with the stock market the last couple of days. It's been really crappy since around May 5th, and I wanted to talk about what I've been doing as far as my portfolio goes and kind of how I'm setting up going in to the rest of this year, to the second half of 2022, and what my thoughts are on the market, on the Fed, and if we are going to be falling into a recession or if we are maybe already in the beginning of a recession. I'm going to give you everything that I can tell you about it right now. So all I can tell you since my last video, basically what's happened for me and what I've done with my portfolio is on the 5th, when the Bank of England came out and said that they even see signs for a possible global recession. To me, this kind of made me open my eyes and go, yeah, this could be maybe a bigger problem than I had even thought of, just a recession here and maybe a couple of recessions here in the EU and a couple maybe through the UK, just depending on who's getting hit by certain supply chains and depending on who's actually fighting inflation the same way that the US is. But yeah, the whole idea that globally we could be going into recession with different countries is one that I really didn't even think about until the Bank of England came out and mentioned it. And that is definitely something that could happen. And I think if globally we go into a recession compared to just us as the United States going into a recession alone, it could definitely cause a deeper recession, a possibly longer lasting recession. And, I didn't really think about that as I had started to buy back in prior to when I had made that video on the 3rd. So on the 5th, I sold all of those positions when the Bank of England news came out. And it just so happened that same day, as the market worsened after I had sold, I avoided a bullet there on that day. I sold when the Dow was down about 500 points, just to give you an idea. If you can remember that day, the Dow went down about 1,400. So I avoided quite a bit, even just by the time that I had sold. But later that day, consumer data came out as well, talking about traffic in the stores and different things for retail data and actual like in-store shopping. And that's declining now too. So we had already found out from earnings that e-commerce was down and we had less people actually shopping online. But now we also found out that same day that, hey, actually in-store shopping is going down as well. So the consumer, one of the only things that was actually helping this economy, helping the GDP, something we're actually looking to actually help us with Q2 GDP numbers to help us from going into a recession with another negative print, they're faltering. And I think it's finally kind of hitting Wall Street's head and kind of finally being broadcast out to the public just now. I mean, I've been feeling this way for a couple months, but I think finally people are kind of going, maybe the economy is kind of a little too hot. Maybe we are going to go into a recession. I think that finally started to hit people's minds. And I think that's why we are suffering so much these last few days, is because people are just barely kind of starting to even understand that, yeah, a recession is truthfully possible, and it's not just something that economists can just point their finger at and say maybe a 25% chance. Truthfully, I think it's been a higher than 25% chance for some time now. After that 10-2 yield inverted and we went into the inversion, even though it was only for a day and a half or so, I've felt like that ever since that happened. We were at like this 50-50 kind of point, and it all lied on the Fed and the consumer of America. And so, yeah, the Fed might only be raising by 50 basis points, but they're going to keep doing that. And at the same time, right now, the consumer's stopping spending money. So now what we're going to do is we could go into something that's called a stagflationary period, and that's not good for the economy one bit and will cause a recession. Really what happens is if we're going into negative GDP prints at the same time as the Fed is tightening policy monetarily, it's just going to kind of rapidly accelerate the pace at which the GDP could actually start to fall. You know what I mean? And then on top of that, we add in that there's a possible chance for this to be not just a recession here in the States, but an actual global recession. And now all of a sudden exports and imports and everything, all of the GDP numbers are going to just come crashing down even harder because it's a global scale kind of incident, not just something here at the States. That's what kind of caused me to sell again. That's how I'm feeling. I don't really feel super optimistic as far as this market goes. I really do think that we are headed for a recession. I think at this point it's inevitable. I think that a recession is going to happen. I just don't know how deep it will be and for how long it's going to last. So right now my goals are this. I don't have anything in the market except for a couple Tesla shares that are just there because I wanted to own some Tesla under 800 today, which I took advantage of. I think I have 2 Tesla shares. That's it. That's all that's in the market now for me. Other than that, I'm cash. I still have both of my properties. I live in one. The other one is rented, and I have no problem as far as rent goes. I cash flow very great on that. but I am thinking about selling that first property. And the reason why I would do that is because, in my opinion, with the 3-year, or not the 3-year, the 30-year treasury, the 10-year treasury, my bad, the 10-year treasury, which affects the 30-year mortgage rate, my bad, that was a big jumbling of words. That is getting so high. We're over 3%. And I mean, right now, mortgage rates, most people are going to be, like average credit score people, are going to be over a 6% rate on a 30-year mortgage right now. And yeah, right now we're just barely starting to get some lagging data for housing stuff, but you better bet that housing is going to slow down too. So in my opinion, we really could be headed for another 2008 kind of style recession. I don't think it's going to be a 2000s.com bubble recession or anything like that, but I do think that we could be heading for another 2008 style recession. And I mean, I have people that work in the mortgage lending industry, and they're telling me that their bosses, their higher ups, the actual people who own these mortgage companies, they're talking to their employees and having conferences saying, okay, guys, we're going to get ready for a recession. And, reverse repos, they always do really good. Or reverse mortgages, they do really good coming out of a recession. So that's their pep talk. That's how they're selling people that keep on working for them is, yeah, it's going to be a recession, but don't worry, because reverse mortgages get really, really busy around the beginning of a recession / after a recession when people want capital. So kind of crazy. But anyway, guys, that's just my opinion. I think this is crazy. I think this is going to be an interesting market to watch. I do think, though, that what people have to remember during these hard times, during times that the recessions are possible, during times when markets are moving in the downward direction and we don't get to feel that lovely feeling of our portfolios going green every day, I think what's really crucial and what's really important to be doing is be thinking, okay, well, things are actually getting cheaper. So I need to start really working hard, trying to find the best assets that I can buy, the ones that are going to appreciate the very most after we get through whatever kind of financial hardship we might have, or the economic kind of hardship that we might have for the next little while. Okay, so what's best to do is to make sure you're out of debt. Of course, never have much debt, especially credit card debt. If you do have debt, make sure it's real estate kind of debt. Don't even have car loans, guys. Let's just be real. Let's try and keep debt off the table entirely, besides smart debt like real estate debt. Really is the best kind of debt that you can have, in my opinion. Even like margin debt on stocks is not good. But anyway, guys, so that's what we want to do, get out of debt. And then after that, just start raising cash and get ready so that way you can go take advantage of deals as they come along, if they come along. And trust me, if we go into a recession, you're going to have plenty of deals. And then what we do is we wait and we wait and we wait. And let's wait and start to hear maybe a little bit of news from the Fed or from some of the policymakers. Maybe we start to break through and hit some levels like that 200-day moving average on the weekly chart for the NASDAQ, to where we've bottomed before in the past. And maybe the Fed starts to U-turn a little bit on policy, starts to kind of ease up on policy a little bit, starts to say, maybe we will kind of start to add to the balance sheet again instead of running it off and stuff like that. Those are your key times to buy back in. But until then, I think it's smart. It's not dumb to play the market. I think it's smart to hold off. Don't buy into stocks until you're ready, and maybe wait for a little bit more accommodation from the Fed. And when that time comes, maybe start to buy back into companies that you've been watching and studying for this time. And that way you can have the best possible returns come out of this when we do kind of come back out of whatever financial recession or financial hardship we might have in this country for the next little while. Just my 2 cents. That's what I'm going to do. It's where I'm positioning myself. I think that these are opportunities that are coming up to us very, very soon. And I think that we got to just think ahead instead of thinking in the now and thinking about the bad that's here. Let's think ahead of the opportunities that are coming our way, guys. Anyway, until the next video, peace.